They've experimented the most in VR, right? Do you see other technologies changing the way we see the game other than just the streaming distribution?
For sure, certainly. 5G is going to make a difference in how we consume video. We're the first NBA arena that Verizon has wired for 5G, so we're prepared for that. But, will people continue to watch 2-hour games? Or more and more we're seeing people consume parts of those games? How do we deliver what people want on the device they want when they want it? And then how do we monetize it, right? We have a time-tested formula for television distribution that's worked very well for all the leagues, but it's a story to watch in the next decade on how that evolves.
How does sports betting fit into all of that? What is the potential that can be unlocked here?
Again, I think we have tried to take the lead, we, the NBA, in believing that sports betting is going to be a big part of our future. It's, everywhere else in the world it already is. And, Adam Silver, again, from the early times, has been talking about how the integrity of the game is enhanced by the more visibility we can have into sports betting. Today, out of sight is more dangerous than full transparency about everything that's happening. So how it evolves state by state is a really complicated puzzle right now, but I think we're headed in that direction inevitably where we're all going to be involved. All the leagues will be involved in sports betting in a significant way.
And finally, the team itself. Durant's gone. Klay Thompson's out with an injury. How are you feeling about your prospects heading into the new season?
I think there's some real optimism in our locker room. I think, yes, we miss KD, but we're the only team that's starting the season with 4 All-Stars. Draymond Green, Stephen Curry, Klay Thompson will be back, and D'Angelo Russell came back to the Warriors in the deal that took when KD went to the Nets. So, we're not healthy right now, and Klay Thompson's got to be healthy for us to be a contender. But if we can hang in there the first half of the season, I think we can make some noise as playoff time comes around.
Well, we appreciate you taking some time with us this morning.
Thank you.
Good luck in the upcoming season.
Appreciate it.
Rick
Thanks.
Welts joining us.
Let's get over to Sue Herrera, get a news update at this hour. Hey, Sue.
Good morning, Carl. Good morning, everyone. Here's what's happening at this hour. A federal judge has rejected President Trump's challenge to the release of his tax returns to a New York State criminal probe, ruling that he must turn over 8 years of his personal and corporate returns to prosecutors. Trump's lawyers argued that he is immune from any criminal probe as long as he is president. Turkish-backed Syrian fighters are training in northern Syria in preparation for an expected Turkish incursion into Syria against U.S.-backed Kurdish forces. President Trump said on Sunday that U.S. forces in northeast Syria will move aside for an expected assault. Senator Lindsey Graham called that decision a disaster. North Korea's chief nuclear negotiator says it's up to the U.S. to determine if there will be further nuclear talks between the two countries. He made the remarks while at the airport in Beijing on his way back to North Korea after a breakdown in talks in Stockholm over the weekend. And the Nobel Prize for Medicine was given to Americans William Kaelin and Greg Semenza, and also Britain's Peter Radcliffe. This for their discoveries of how cells sense and adapt to oxygen availability, which has paved the way for advances in fighting a number of diseases like anemia and cancer. You are up to date? That's the news update this hour. Morgan, I'll send it back downtown to you.
Fascinating research.
It is.
Sue Herrera, thank you. When we come back, what should investors expect from this week's China trade talks? We'll tell you how to play the potential market volatility next when Squawk on the Street returns.
Everything you... We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
NFL fans, football lives on TuneIn Premium.
Wait, the pro size, no, the ham size. He breaks 3 down to the 5. He's in. Touchdown!
Tonight, TuneIn has your Monday Night NFL football with the Cleveland Browns at the San Francisco 49ers. Kickoff at 8:15 p.m. Eastern.
Trying to dive. Touchdown. 20 to the 15 to the 10. 5. Mike Evans. Touchdown.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Welcome back to Squawk on the Street. China reportedly reluctant to agree to a broad U.S. trade deal, with talks set to resume on Thursday. Joining us now is PIMCO Head of Public Policy, Libby Cantrell, and Counsel on Foreign Relations Director of International Economics, Ben Steele, both at Post 9. Welcome. Hi. Libby, I'll start with you. What do you expect from these talks this week, especially given the reports that maybe China is going to come with a pared back?
Yeah, I'm not sure actually that's really news, right? I mean, here we are in the 13th round of negotiations. This has been happening for a year and a half. We know that China has been very reluctant to make these concessions on structural issues that are related to their industrial policy. Clearly, that stance hasn't changed. Maybe they're being a little bit vocal about that. So I think, what we're telling clients is best case here, maybe you get a reprieve in the escalation, i.e. maybe you don't get the tariff increase on October 15th from 25% to 30% on $250 billion of goods. But that's the best case, right? The worst case, and I think probably equal chances here, is that you do see escalation on October 15th. I think then the big question is, do you see those next round of tariffs implemented on December 15th?
Ben, how do you think about it?
This is probably the last best hope for the administration to get a significant trade deal before the election next November. And the leader of the Chinese delegation, Liu He, has gone out of his way to dump cold water on expectations. He signaled that he wants to take structural reforms off the agenda entirely. He's proposing a much narrower deal, which would effectively be a complete Chinese victory. That is, the Trump administration would roll back all of the punitive tariffs it has imposed, in return for which China will buy agricultural and energy goods, which it absolutely needs, which it would buy in its own interests.
Yeah, and of course we know if this is all that this was really about, was this idea of China buying more commodities, it probably would have happened over a year ago at this point.
So why did we go through it?
Libby, here's a key question. We focus a lot on presidential candidate Elizabeth Warren gaining in the polls, what that could mean for the markets, but she's just as hawkish on China, if not more so. So what could that mean to trade talks?
Yeah, and it's a very good point. Now, she has indicated that she may not be such a believer in tariffs as much as President Trump is. However, I think this is a big however, that Democrats, any Democratic nominee, whether that's Elizabeth Warren or Joe Biden or anyone else, and we would say to our clients very early days, so this sort of talk about, Warren being the ordained nominee, I think it's way too early. Anyway, is going to use a more multilateral approach, and that could be even more formidable in some ways to China, because this president, of course, has pursued more bilateral tariffs, bilateral trade negotiations. What I think you would see a Democrat do is sort of revisit the TPP framework, trying to get our allies on board to isolate China. And in some ways, that could be even worse for China. I also think a rollback of tariffs, if we have them come the election 2020, it's going to be very difficult for a Democratic president to roll these back politically, because presumably they would have won on the backs of organized labor, and organized labor is not going to necessarily support an easier stance on China.
Ben, how do you think what happens this week or the coming weeks affects our strategy on tariffs on Europe? Right, we're still waiting for a decision on autos. We know the WTO is going to let us make good on the Boeing Airbus. Can we do a two-front war?
My expectation is that the administration will really try to extract every possible political benefit out of the WTO decision, allowing the United States to impose punitive tariffs on Europe, and will make it clear to the Europeans simultaneously that they are going to do this entirely legally. So we can play it one way for a domestic audience, that we're expanding the trade war in a positive way against the Europeans, but we can simultaneously say to the Europeans, look, really, this isn't an expansion. We're just sticking within the multilateral framework.
Libby, that's...
Actually, so I completely agree. Now, the autos, which is you referred to, Carl, is something that deadline's coming up in mid-November. So let's see where that goes. I think that the administration will be very reluctant, though, to pursue a trade war with both, or, that's not necessarily sanctioned by the WTO. What I do think, and maybe more optimistic from a market's perspective, is I think you're going to see the administration, and you saw Peter Navarro do a little bit of this morning in an interview, pivot to the USMCA. Talk about how important that ratification is. I actually think Speaker Pelosi has more pressure now to get that ratified because she needs those centrist Democrats to actually declare some sort of victory in addition to potential impeachment. So I think you're going to see the administration really start pivoting away from China, U.S., and try to pivot to NAFTA 2.0 in order to get some sort of win on trade.
Is she going to trade USMCA votes for an impeachment support? I'm not kidding.
No, I don't think she's, look, she's very good about sort of separating those lanes. She's obviously been very reluctant to pursue impeachment. But the political reality is that 31 of the 235 Democrats are in districts that President Trump won. They need something for their constituents to say, look, we can impeach the president, but we can also deliver a victory with the president.
Yeah, Ben, I mean, that raises such a key question, whether we're talking about USMCA or some of the other policies that are stagnating in Congress right now. How much can actually get done with this impeachment inquiry?
We're in gridlock. I probably am a little less optimistic than Libby on the USMCA front. I don't think that's really going to be central to the concern of the right-leaning Democrats because they still got to deal with union opposition. So Pelosi is clearly going to demand labor-friendly reforms to USMCA before it comes up for approval.
All right. Thanks for joining us. I have a feeling we're going to have another whirlwind week here, Libby and Ben. Thanks.
Well, major manufacturers, including Caterpillar and Deere, hoping for progress in those trade talks we were just talking about. Of course, uncertainty continues to take a toll on both companies' sales. Our Frank Holland is live in Illinois. He's got more for us on the story. Frank.
Hey, good morning. Farm equipment sales are $22 billion so far this year. Big number, but still an 18% decline from 2014. And major manufacturers like John Deere, they are feeling the impact. Deere saying its agriculture division is down 6% last quarter. It's also laying off workers here in the Quad Cities area where it makes that farm equipment. Caterpillar saying sales of tractors and combines, two essential pieces of farming equipment, those sales are down for the first half of the year. Rain and flooding here in the Midwest delaying the harvest, as well as the ongoing trade war reducing crop exports, have farmers like Phil Four, who is a soybean farmer, that's his primary crop, and who also owns 20 pieces of Deere equipment, holding off on buying anything new this season.
I'm just trying to take a wait-and-see attitude, maintain the old equipment, and then if times improve, we'll roll into some newer tractors or combines.
Deere is a leading employer here in the Quad Cities area, providing about 4% of jobs. We spoke to a number of locals. They say any downturns with Deere or layoffs are concerning, but they're not really sure it has a big impact on the overall area.
I believe all the farming industry runs in cycles. I think that, we have layoffs and shutdowns for a while, but it seems like they always call people back.
If their sales are good, and people are buying products, ag-related products, then yeah, it helps everybody.
The willingness of farmers to make capital investments in new equipment has really plummeted over the last 3 months, according to the Agricultural Economy Barometer put out by Purdue University. We'll get a new reading on farmer confidence on Thursday when the September numbers for farm equipment sales are released. Coincidentally, that's the same day that U.S.-China trade talks resume, another thing that can or cannot give these farmers confidence. Back over to you.
Frank, we talk so much about the trade talks and the dynamics around exports to China of our farm goods, but there's also this swine flu that has just decimated the hog population in that country. I wonder how much that has affected the demand for some of these feeds like soy or some of the agricultural commodities that we grow as well.
You know, Morgan, that's what these farmers were talking about. They say a lot of people are talking about the trade war, but another big factor for them is African swine fever in China. Two big exports for them are soybeans and corn. That's what a lot of people in China use for hog feed. So that herd is about 50% down this year because of African swine fever. They say an optimistic outlook for next year's herd would give them a lot more confidence.
Yeah, whether it's the flu, weather, it's just been a tough year for ag in general in this country, Frank. Great reporting. It's nice to hear it from the ground. Our Frank Holland today covering the farm economy. As we go to break, take a look at shares of GM today. Talks between the automaker and the UAW have cooled as the strike now enters day 23. GM down double digits from a month ago. Later on, don't miss an exclusive with Charles Schwab on the half. Obviously talking zero commissions, the changing investment landscape, and a lot more. We're down 82. Don't go away.
What gives me confidence about investment decisions?
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
Searching for a more memorable short break? Fly from London Heathrow to Cork from $55.99 each way as part of a return trip with Aer Lingus. Step off the plane and into a warm welcome in Cork. Surround yourself with breathtaking coastal views. Soak up the culture of Cork City or head to the colourful town of Kinsale and indulge in the best seafood around. Smart enjoys a short break in Ireland. Smart flies, Aer Lingus. Book now at airlingus.com. Offer subject to conditions and availability.
Will cancer affect my sex life?
Your sex drive can disappear. The side effects may stop you.
Your sex life can easily stay.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day. Only on TuneIn.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
Throw it. He's got it in stiff arm. End zone. Touchdown.
You can listen to it all for free at home, on campus, or on the road. Hear the excitement and pageantry of college football all season long free on TuneIn.
Strategist sees more economic weakness ahead, but it's not reason to run scared. Find out why on tradingnation.cnbc.com. More Squawk on the Street coming up.
Wow, what a beautiful wedding.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back. General Electric is taking steps to shore up its pension plan. The company cutting its pension deficit by up to $8 billion and industrial net debt by up to $6 billion. GE will freeze the plan for current employees and offer a lump sum option for retirees who haven't yet started to collect benefits. Those who have started to collect are unaffected. So in terms of the details around this plan, we're talking about freezing pension plan for about 20,000 U.S. employees with salaried benefits. Another 700 more who became executives in 2011. You're going to see those supplementary benefits frozen, and a buyout for about 100,000 former employees. And really kind of speaks to this move, this broader move by CEO and Chairman Larry Culp, who's been at the helm for just over a year now, to pay down debts and shore up the balance sheet in terms of the traditional pension plans, underfunded by about $27 billion at the end of 2018. It is one of the company's biggest liabilities, and it again speaks to what Culp has said repeatedly, David, that 2019 is a reset year, so this is one more move. I'd imagine a very difficult move to try and focus on cleaning up the financials here.
Yeah, of course, you remember this is an old line company with those pension funds.
Yep.
You don't see any new companies have sort of benefits along those lines any longer. But quantifying the liability, that's kind of the key. To the extent that you can do that for investors, whatever it may be, you give them at least a little bit more confidence.
Yeah, I mean, they're saying they're going to record a non-cash charge here. I think, again, at the end of this month, when we get GE's earnings, there's going to be a number of things to focus on, including the charge, which is expected to be upwards of $8 billion for Q3 for Baker Hughes as it sells down its stake there and raises cash and cedes control. You've also got those annual liability insurance reserve review, which we're expecting details on as well. But I think in some ways this kind of begs the question, as the company continues to raise cash, Wabtec included, selling out of that stake and restructuring that stake, the pending sale of biopharma. Where else? What are the other levers that GE has to pull to continue to raise cash?
Yeah, and that's a question in terms of how much they have to. And then, of course, just the overall turnaround of the underlying businesses, which is the key.
Absolutely.
And how quickly power can sort of really get back to being something other than a drain.
Yeah, plus you got the 737 MAX Boeing situation. They make the engines for that, and this bigger discussion that we're having about slowing global growth and what that means for the industrial sector overall.
Speaking of which, White House advisor Larry Kudlow's on the tape this morning saying he does not want to predict the outcome of trade talks with China, which, of course, start later in the week. He does add that we're concerned about the slowdown that we've seen in manufacturing. We're looking at that carefully, and does say, speaking of all this, that the GM strike and the halt of the MAX manufacturing at Boeing was not helpful to the U.S. economy. So we'll watch and see how that gets absorbed by the algos and investors later on today.
The algos being
the machines.
Yes.
All right, but we're not machines yet. Let's send it over to John Ford. He's not one either. He's got to look at what's coming up on Squawk Alley. John.
Last I checked, David. Well, speaking of the U.S. economy, Democratic presidential candidate Tom Steyer is out with his economic plan today. He's going to join us. We've got some questions for him about some ideas he's got here, kind of controversial. That's coming up in Squawk Alley.
Orlando isn't just the theme park capital of the world.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
Daddy, you know my birthday party?
Yes.
Can we do painting?
Of course.
And can we have fireworks?
Absolutely.
And can everyone in Year 4 come?
The more the merrier.
You're very relaxed about this.
At John Lewis Finance, we've crafted our premier home insurance with real care, so it provides accidental damage cover for those unexpected mishaps. We're also a Which recommended provider for Home Insurance 2019. Find out more at johnlewisfinance.com. Home insurance from John Lewis Finance. Excess and exclusions apply.
Will cancer affect my sex life?
Your sex drive can disappear. The side effects may stop you.
Your sex life can easily stay.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every...
And it's a home run!
Single...
And goal!
game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit.
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Welcome back to Squawk on the Street. I'm Seema Modi. Watching consumer discretionary stocks trade lower at this hour. Notable weakness in the cruise operators this Monday morning after HSBC downgraded shares of Carnival to hold from buy, cutting its price target from $68 to $42 a share, citing weak bookings in 2020, disruptions from the hurricane. It comes after UBS downgraded the stock last week. And if you look at the performance of cruise stocks this year, you'll see that Carnival is faring the worst, down 17% in 2019 compared to Norwegian, which is up about 14% so far this year. Now I'll send it back down to you guys. Carl?
All right, Seema, thanks. When we come back, Recode's Kara Swisher is going to join us on set, talk about the turbulent IPO market on pace for the worst year since '95. Market improving a bit here on these Kudlow headlines. We're down 43. Don't go away.
Real-time We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
You don't just live in one room, so why should you Wi-Fi? With Sky Broadband's Wi-Fi guarantee, you'll get Wi-Fi in every room or money back. Perfect for food shopping in the bedroom, gaming in your PJs in the lounge, or streaming sci-fi movies in the kitchen. Get Sky's super fast broadband and Wi-Fi guarantee. £32 a month for 18 months with $19.95 setup. Click on the banner now.
Sky Fibre errors, Sky Kit required. Refund on boost component of subscription paid during current minimum term up to date of claim. Minimum 3 megabits per second or money back. Prices may change during minimum term. See sky.com/guarantee.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live. Regular season matchups and rivalry games. Conference championships and bowl games. The college football playoff.
The throw, he steps up, he's going deep down the right side. Andrews.
You can listen to it all for free.
The end zone, touchdown.
At home, on campus, or on the road, hear the excitement and pageantry of college football all season long free on TuneIn.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
Good morning. It is 8 a.m. at Netflix headquarters in Los Gatos, California. With Morgan Brennan, John Ford at Post 9 of the New York Stock Exchange. Market improving here on some of these headlines from White House advisor Larry Kudlow. In the meantime, Facebook, Amazon, Alphabet all trading between 7 to 15% below their peaks from last year. And on that note, we're going to turn to Mike Santoli once again about what this says today about big tech valuations.
Valuations have moderated. Sentiment has obviously turned. And I think what's interesting is how the storyline has changed when it comes to Wall Street treating these companies. I think mostly what we're talking about here is Alphabet, Facebook, and Amazon as opposed to Netflix in this instance. Because what you're seeing more and more is analysts talk about a potential sum of the parts type valuation, a breakup value type analysis of these companies. Not because people think that they are likely in any time soon to be broken up, but because they want to surface the idea that there's value not recognized in the markets. I think it was emblematic last week. You had one analyst saying Google Cloud Partners is worth $225 billion. If somebody says, if you buy into that valuation, is Amazon Web Services worth almost all of Amazon's market cap? And you can go on with the kind of conventional wisdom that if Facebook were somehow broken up, or you spun some of those off, that maybe the sum would be worth more than than what it is right now, right? So I think that this is mostly a Wall Street exercise, but what it does show you is that FANG became FANG because the idea was they had created these platforms. They were winner-take-most tech leaders in consumer internet, and the networks just spun profits inevitably. And now it's about what assets have you built and what could you possibly surface in the way of value.
I guess another side of this argument is looking at Apple and Microsoft, which are both doing about as well as they have for a couple years. Both have market caps above $1 trillion and seem in a way to be, as investors are getting wary about growth companies that are smaller, perhaps they're fleeing into the arms of Redmond and Cupertino.
I agree. It's exact. Those are the companies that still have that story intact, where it's like, well, they have this ecosystem. It really is working. There's not a lot of pressure about antitrust behavior or anything like that right now on them. And so you can just allow the models to work for you, as opposed to these other ones where, interestingly, the businesses, not much has changed, right? We all know that except for Facebook ramping up costs to do some policing of its network, it hasn't really altered that much. The problem was the market was willing to give like an Alphabet the benefit of the doubt for a long time, that look, you're paying for search because it just grows inevitably and the rest of it comes as a bonus, or you have to live with what they're spending on the rest of it.
Are you including Netflix? Because today Evercore goes 380 to 300 and asks whether they've set this deflationary standard and trained us all that we can get stuff for free.
Exactly.
Essentially.
Well, I think that's kind of chasing where the market had gotten to a little bit in terms of its reassessment of Netflix. The reason I was excluding Netflix is it doesn't have a lot of those issues in terms of actual regulatory pressure, right? I mean, it buys its content at market rates and it resells them maybe at less than that. So it's not really, but it's much more also about there aren't any hidden assets. This is it. This is the one product company for the most part.
Yeah, I mean, we're going to be speaking to that analyst behind that call a little bit later in the show as well. But in the meantime, Mike, I just wonder how it speaks to sort of the broader market here. Because, yes, we're talking about the tech companies and this whole idea of some of the parts exercises with the biggest tech companies. But overall, I mean, you've seen this move to deconglomeratize, if you will, other big companies and other sectors, whether it's industrials, whether it's consumer staples in the last couple of years, and realize more value. And I guess, how does this just speak to the fact that these are the biggest companies, and that this has been the market narrative.
The pendulum always eventually swings in that direction. I think the issue with these tech companies we're talking about is they're still founder-led. I think these founders still think of themselves as, look, we want to create this paranoid entrepreneurial culture. We have to start all these other new things and fund it with the cash cow business because we just don't know what the future looks like. Whether that's true or not, that's how they treat the company. So I think it would be only by force or in a reluctant way out of a position of weakness that they think about breaking apart.
Mike Santoli, thank you. For more on this, let's bring in tech portfolio managers Paul Meeks from Independent Solutions Wealth Management and Eaton Vance Large Cap Growth Fund portfolio manager Lou Piantadozzi. Lou, I'll start with you. Is there a bull case here that you could see these big cap tech companies broken up? How are you thinking about these sum of the parts exercises?
Well, I think it makes a lot of sense. These companies have, a lot of various businesses that are all growing pretty rapidly. If you look at a company like Amazon, their web services division is growing north of 30+%. Online retail is still less than 10% of overall retail spending, so that still has plenty of legs to go. So there's still a lot of growth left in these companies. And I think Mike Santoli said it best when he said nothing has really changed with these companies. The only thing that's really changed is the rhetoric and the sentiment regarding these companies. And I think that can shift over time, but at the end of the day, fundamentals matter. And with these companies, as those positive fundamentals continue, the stock should respond in kind.
Paul, do you agree?
I agree to a certain extent. I would say that I go through in my own work some of the parts of analysis, and I think once you do that with the FANGs, the most attractive to me is Google, but the most interesting based on its rapid growth is Amazon. And so I would say, as a backdrop, that I still think trumping some of the valuation, because you're not going to be able to do too much valuation work with some of these companies, is the rapid growth of users and revenue. And that's why I continue to like folks like Amazon with Amazon Web Services. So, yes, the breakup analysis is somewhat important, but the revenue growth is always going to be the most important.
Paul, should investors be going through the bargain bin, looking at some of these recent IPOs that are trading below where they priced? I mean, I'm thinking Uber, Lyft, even some that are doing better than where they were trading on their first day, like Zoom, have come way down from where they were trading just a few weeks ago. If they were good at those hyperinflated, perhaps, prices, are they still good here?
Yeah, I think Zoom is interesting. It hasn't broken too badly. And some of the other ones that actually look like they have reasonable business models like Pinterest. But I think the ride-hailing business is uneconomic. And regardless of where Uber and Lyft are today, those stocks would go much lower. So I would not swoop in on those two names.
Now, what's much lower, Paul?
It'd have to be a lot lower. I can't say that the stocks are going to zero, but think about the market caps. They are still quite large for a business that has shown that there are no synergies, there are no network effects, and now they're not only facing revenue pressure, but they also have rising costs. It's only getting worse, not better.
Lou, it's pretty amazing that given all the market turbulence we've seen to start the month of October, there are two sectors that are actually back in the green, and it's communication services and technology. So I guess with that said, do you see any bargains in this market right now, especially if you are on the prowl for, so-called growth names?
Yeah, I think the technology outperformance is a little deceptive in that it's being led by two of the biggest cap stocks out there, Apple and Microsoft. There's a lot of damage below the surface, and that's where we're trying to seek out some opportunities. Names that have been beaten up a little bit, that have great longer-term growth prospects, but because of various sentiment issues and investors' concern about longer-term growth, we're looking for that opportunity.
So what are some of those names, Lou, and how risky are you willing to get as you're looking out for those positive outcomes?
We think there's a lot of opportunity in network security names. I don't want to get into specifics as we are relatively active in some of those names, but I think some of them come down quite a bit in the last 6 to 9 months and present great entry points in a real secular growth area of the market.
So, Paul, going back to IPOs for a minute here, given what we've seen with WeWork, given the fact that we've seen some other names that were pulled last minute before coming to the public market, do you think the window is closed right now?
I think the window is closed, or else it'll open, but you're going to have to give investors a good deal, not only with a quality company that at least has some prospects of generating free cash flow, but at a reasonable valuation. And the reasonable valuations, after all the carnage in the IPO market thus far in 2019, is much lower than probably the marquee investment bankers think.
Paul and Lou, thanks for joining us today.
Thank you.
Thank you.
When we come back, we'll talk a bit more about the fear that has crept into the IPO market in a post-WeWork world. Recode's Kara Swisher is with us to discuss. Plus, 2020 presidential candidate Tom Steyer rolling out his economic agenda, taking aim at corporate America, will join us later on this hour. Those Kudlow headlines did work. S&P's gone green. We're back in a moment.
I heard you guys have Workday now.
Yeah, they're a great partner.
The nights have started to draw in. And at DFS, we know that can only mean one thing. Everyone will want to spend more time at home, getting nice and cozy. Ah, you can't beat it. That's why all our sofas are handmade to order, and many are guaranteed to be delivered in time for Christmas. So you can look forward to cozying up this winter, knowing your new sofa won't let you down. DFS.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $1,049. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
Oh, look who's home. Long time no see.
You haven't changed a bit.
Come on in. Welcome back.
With genuine BMW expertise, parts, and a convenient range of options to suit you, when it comes to caring for your BMW, there's no place like home. Book your BMW service online 24/7. T's and C's apply, subject to availability, participating retailers only.
Now, let's take a look at you.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
The throw, he steps up, he's going deep down the right side, Andrews.
You can listen to it all for free.
The end zone, touchdown.
At home, on campus, or on the road, hear the excitement and pageantry of college football all season long, free on TuneIn.
We don't need to tell you, it's been a turbulent year for IPOs. 158 companies hit the public market, making this the fourth busiest year. But it's the performance that has investors and private companies looking to go public taking pause. Goldman says it's the worst market for IPOs since '95. Are investors really starting to sour on startups at large? Joining us to discuss, Recode's editor-at-large and CNBC contributor Kara Swisher. Kara, it's great to have you.
Hello, how you doing?
I'm good. Well, better than Uber shares or Peloton shares.
They're down. They're off.
So what is it? What is this saying to you?
Well, I think it's like I said last week. Math is an issue, and these people are wondering how they're going to be economically viable without raising prices or without getting smaller or something like that. And so they haven't grown into these massive valuations that these major investments from SoftBank, for example, have put on the heads of these companies. And so, they're sort of too big for their britches kind of thing.
And were there just too many?
Too small.
Too small for their britches?
Yeah.
Were there just too many, though? Because even companies that look economically pretty good, like Zoom. You might argue Pinterest. They ran up, kind of came down.
Yeah.
It's not just the companies with dubious business models that have been sort of performing oddly in this market, but there's more IPOs that were coming to market this year than ever before. Maybe it was just too many.
Not too many. I think it's just the valuations. These private valuations, how long it took to go out, are just too high, and the retail investors are not having any of it. And so I think it's just sort of that bubble atmosphere in Silicon Valley, especially after SoftBank came in with all that money. It's not to say that some of them aren't great businesses. I mean, Peloton's a really interesting business. Zoom is a great business. Pinterest is a great business. But they're just not worth that much. And I think that's the disappointment. So I had like some people from all these companies like, I was going to buy a big house. Now I'm not. They're disappointed. There's that, I think I'm worth this, and I'm actually worth
They're still going to buy a big house.
Yeah. There was a great lead in a CNBC story, I think it was Alex Hall, I'm not sure who wrote it, that said, WeWork decided we were worth, it was Vice deciding it was worth $3.6 billion when it's buying.
Alex Sherman, yeah.
Right, Refinery 20. Actually, Sherman, great lead, said, I've decided my house is worth $278 million. And it was like, it's like that. These valuations are just made up and fictional.
Given the debate that's going on right now in Silicon Valley around direct listings, do you think this conversation would be happening quite the same way now if direct listings had been used by more companies?
I don't know. I think the price is what it is, and everyone can read math, can read a spreadsheet that's making these investments. And it's not, it used to be it's just popular and people bought into it, but I think most people are really soberly looking at these businesses and where they're going. And I think that's it. It doesn't mean some of them won't be more valuable. They've got to grow into their value, I think. Just like I was mentioning earlier, Instagram, if they spun it off, say, in a regulatory fashion, or AWS, those grew into they're massive companies. They'd be great for IPOs or spin-offs. And that would be a massive boost to the system, I think, if like an AWS spun off. And shareholders at Amazon and shareholders at Facebook would be thrilled.
We've been talking about it for so long, but are you sensing any interest in those giants doing anything like that?
I don't know if there's going to be interest or maybe compelling reasons, including antitrust investigations and things like that. And so why not think of it as an opportunity rather than a negative?
Is Vision Fund 2 going to be sort of a referendum on what's happened thus far? I mean, I wonder, is SoftBank even going to be able to raise the full fund? And then if they do, can they do the same thing with it that they did with the first one? Or are they really going to have to change their deployment strategy?
Well, the whole idea of throwing money at anything, as you know, is just not the way to go in any of these companies. I think there's a certain amount of money these companies need to be capitalized, but there's all kinds of really interesting areas like farming, there's all kinds of interesting areas of tech that need heavy capital that are so promising. Climate change, I keep saying the world's first trillionaire will be the person who solves a lot of these climate change problems with technology.
So then I guess in light of that, what are the companies that you're keeping a close eye on that haven't gone public yet, but there's been speculation could?
Airbnb. I think that'll be really interesting to see those numbers, the real numbers there. I think it's probably a pretty good business, I'm guessing. Or Palantir will be interesting. Not Palantir, I'm sorry. Palantir, right? Palantir. And several others. There's a bunch of others that could be interesting. I think Airbnb will be the big consumer one and the one that consumers know best. And, we'll see.
We had Gurley on last week talking about the direct listing push. Is that resonating out west?
I mean, they like the idea because it's more control. I mean, these people they like their stock that they control and their boards that they control, and they like their stock market.
Fewer fees.
Yeah, fewer fees. And Wall Street doesn't help me. That's a typical Silicon Valley attitude.
But is there a change potentially in the type of control that these companies are looking for? So there's a lot of talk about direct listings. At the same time, there's talk about, well, let's do away with some of the extremes in the classes of stock. Do you think that's really going to stick?
That's never going to change until they have to, right? Until investors.
Well, now do they have to
push them on? Maybe they have to. Maybe they're. And so I think what's interesting, what Bill Gurley's talking about, is not capturing a lot of the value. That said, Bill Gurley captured plenty of value out of Uber, so Bill Gurley should talk. I mean, you know what I mean? He's an incredibly smart guy, but he wants more the valuation, the money that companies get in order to put to capital, to put to use, to be higher. And he has a good point. Why line the pockets of these bankers? Why? It's a good question.
I wonder if you think there is an actual reckoning happening right now in the private market based on the reaction the public market investors have had to so many of these IPOs right now, or whether it just means we're going to see more of these companies stay private for longer.
Well, that's, I think, a problem, staying private for longer. It's problems in terms of being rigorous. It's problems in terms of control. They get used to the control. It's problems of not understanding scrutiny. I think a lot of them are like, what? Like, you have questions of me? How dare you? It's just me out there asking them, and Mike Isaac and Casey Newton, but otherwise,
Well, some of the things now that we're learning about WeWork's initial filings, right? I mean, omitting certain things about number of desks, omitting he's on the comp committee. I mean, the next round of S1s are going to get incredible scrutiny.
And they should, they should. S1s are the best thing, is the best law. Whenever that law was passed, the best law ever, they really do give you an insight, especially when people manipulate them. And I think they have to be quite rigorous. And, our regulatory bodies have to watch. The SEC's got to really clamp down on this kind of thing. And it's hard enough to be a reporter trying to dig these things out. But when you have regulatory filings that are not accurate, that's a real problem.
Are we about to see round, I don't know what you want to call it, 2, 3, 11 on Silicon Valley and China? I mean, I look at this NBA China thing happening now. Yeah. It reminds me of stances that Google was taking a decade ago, but seems to have backed off on. Right? I mean,
they've way backed off on it. They want to do lots of business in China.
So now, does some of that get sort of re-agitated? Are people going to go, well, maybe we can't be in China the way that we thought we could? Hey, wait a second. Is there a line to be drawn here somewhere?
No, I don't.
Same as Saudi Arabia, it just kind of gets blown away.
Saudi money just fine.
Yeah?
Everybody, no. I mean, you mix up hoodies with huge amounts of ethics. I think they're just like any other businesses, as you all know. And I think they have better food. I guess I don't know.
Yeah. Finally, we want to congratulate you.
Thank you.
On the latest member of your family.
I won the Oscar. Oh, no.
This is Clara Jo Swisher Katz. Oh, my gosh.
You have
just glasses on. It's classic.
She's got 2 pairs of glasses, including a gold pair, because gold is best.
Congratulations.
I'm very excited.
To you,
I'm so excited.
Wonderful news. Your life's about to change.
No, I already have kids. You're all like, I got a note from the head of Land O'Lakes, and she's going to send me a onesie. I'm getting all these onesies, and it says, roosters make all the noise, but hens do all the work. So we're just fine. We'll be just fine.
We love you.
Thank you, though. Thank you so much.
Yes.
Thank you.
Kara Swisher.
Yes, congrats. And speaking of private companies looking to go public, this week we are taking a closer look at the most valuable venture-backed companies in the world. Our Deirdre Bosa joins us now with more on Airbnb. Deirdre.
Hey, John, that's right. And shaping up to be the most anticipated listing of next year, but it could look very different than the Ubers and WeWorks of this year. You're just talking about them, but unlike them, Airbnb does operate in the gig economy space, connecting users with a service. Unlike them, it's been EBITDA profitable for the last 2 years, and with $3.5 billion in cash as of the first quarter of this year, it could be looking at a direct listing. Its business model is also fundamentally different. I like that Kara was just talking math. Here's what we know about Airbnbs. For a typical Airbnb stay, the company takes in about 15% in commission fees. The host is charged around 3%, the guest around 12%. This is the lifeblood of this company. The revenue that pays for its costs, like running the platform, and services like the host guarantee and protection insurance. That model, though, is changing as Airbnb goes deeper into the hotel business and competes with big chains and online travel platforms like Booking.com, neither of which charge guest fees. The host or hotel, in Airbnb's case, end up paying more. Earlier this year, remember, Airbnb acquired Hotel Tonight, and it's developing essentially its own hotel in New York with major developer RXR Realty. The key question, guys, when Airbnb files its S1 is whether it's bringing in more money through those commissions than it is spending on costs, things like insurance, which could be a very large cost. Remember that Uber once had a profitable quarter thanks to big mergers in Russia and Southeast Asia. Gig economy companies at large had their own metrics like ride-sharing's contribution margin, and who could forget WeWork's community-adjusted EBITDA. So it'll be critical to see how Airbnb calculates its unit economics and its profitability when it opens the books for its IPO prospectus, guys.
Deirdre, how much do you expect that to swirl around as we get closer to a potential Airbnb IPO? And I guess sort of mid-year next year is a critical period because a lot of issues are trying to see if they can get out before the presidential election season really ramps up.
Yeah, I think that the folks we talk to here in Silicon Valley, they say that the IPO market is still good for a certain kind of company. Mostly those are enterprise software companies that have done better but are still coming off their peaks rather than the gig economy. Companies like Uber and Lyft and WeWork, but Airbnb, it's not really easily classified as either, right? It's asset light, and it has sort of this revenue that it takes through commission fees. So it'll be really interesting to see what happens when they open the books for their S1, and also particularly going to be important how fast it's growing, because John, this is a 10-year company, as you know. Are its best growth days behind it? Or, what are IPO investors? What are they buying into with Uber and Lyft and some of these other high-profile names? Their growth rate is actually slowing by the time they come to the markets.
Deirdre, thank you. As we head to break, getting a check on where the major averages stand right now. The Dow is largely hugging the flat line. We're down about 29 points after being down triple digits earlier in the session. A similar story for the S&P. The NASDAQ is actually up fractionally. Meantime, don't miss an exclusive with Charles Schwab. That's on the halftime report on hitting zero commissions, the changing investing landscape, and so much more. Squawk Alley will be back after this break.
ServiceNow put our workflows in the cloud. This changes.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not Smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's Smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
You're 169 in the queue.
I proposed on the 169. She got for the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Blade for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487.50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
You don't just live in one room, so why should your Wi-Fi? With Sky Broadband's Wi-Fi guarantee, you'll get Wi-Fi in every room or money back. Perfect for food shopping in the bedroom, gaming in your PJs in the lounge, or streaming sci-fi movies in the kitchen. Get Sky's super-fast broadband and Wi-Fi guarantee. £32 a month for 18 months with $19.95 setup. Click on the banner now.
Sky Fibre areas, Sky Kit required. Refund on boost component of subscription paid during current minimum term up to date of claim. Minimum 3 megabits per second or money back. Prices may change during minimum term. See sky.com/guarantee.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying today.
NFL fans, football lives on TuneIn Premium.
Fake the pro size, no, the ham size. He breaks 3 down to the 5. He's in. Touchdown!
Tonight, TuneIn has your Monday night NFL football with the Cleveland Browns at the San Francisco 49ers. Kickoff at 8:15 p.m. Eastern.
Trying to dive. Touchdown. 20 to the 15 to the 10. 5. Mike Evans. Touchdown.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back to Squawk Alley. European markets are closing, and Seema Modi joins us now with a breakdown of today's action overseas. Seema.
Morgan, European stocks turning higher in the last half an hour despite German industrial orders falling more than expected. The banks are in positive territory on a report from the Financial Times that HSBC may cut up to 10,000 jobs in an effort to reduce costs. Germany's Deutsche Bank just 2 weeks ago announcing plans to cut thousands of jobs after its merger. Commerzbank cutting thousands of jobs following its merger with Deutsche Bank failing. Check out shares of Veralia, the manufacturer of glass, closing lower after its second day of trade, going public on Friday. This is France's biggest IPO in more than 2 years. In fact, there has been only 3 IPOs in France so far in 2019. Geopolitics in focus today. President Trump giving Turkey the green light to launch an incursion in northeast Syria, a region controlled by the Kurdish militia. Syria that till now had been seen as an ally of the U.S. in the fight against ISIS. The quick-fire decision is being met with strong pushback from European leaders. A spokesperson for German Chancellor Angela Merkel says such a military intervention by Turkey would lead to a further escalation in Syria and would further destabilize the country. And it does come ahead of a possible meeting between Trump and Turkey's President Erdogan next month. John, sending it back to you.
All right, thank you, Seema. Now let's get to Sue Herrera for a news update. Sue.
Good morning, John. Good morning, everyone. Here's what's happening at this hour. A U.S. appeals court has temporarily blocked the release of President Trump's tax returns to New York State investigators. It granted the delay at the request of the president's lawyers until the appeals court could consider the issue expeditiously. Talks between General Motors and union workers have hit a snag. This, according to the top negotiator for the union. In an email to union members, he told them he believes there's not much hope in reaching a settlement soon. This after the union received a counteroffer from GM on Sunday. Riot police cleared the streets of central Hong Kong of black-clad protesters and makeshift barriers in another night of rage. Earlier, 2 protesters were charged with violating Hong Kong's new ban on wearing masks at rallies. And here at home, former President Jimmy Carter has a black eye and 14 stitches after falling at his Georgia home on Sunday. But he and his wife Rosalind still attended an event in Nashville last night. The couple rallied volunteers ahead of his 36th home building project for Habitat for Humanity. We wish him a speedy recovery. That is the news update this hour. Back downtown to Squawk Alley. Carl, back to you.
All right, indeed, Sue, thanks. When we come back, has Netflix finally met its match? The streaming service bracing as new competition from Disney and others comes into the field. We're going to discuss that and a new note with the Dow down 13. Don't go away.
Consistency delivers.
You're 169 in the queue.
I proposed on the 169. She got off at the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487 and 50p optional final payment. Subject to status to over 18s.